Hi, good evening. Can everybody hear me? See, Katie, can you hear me?
Yep, I'm good.
Oh, great. Okay, we'll get started in just a minute here. Give 2 more people a chance to join in. So would anybody like to share what they do?
I'm a tax preparer.
Oh, wow.
I'm in the process of setting up a stationery company.
Oh, good. Have you started yet, or just getting information and?
I've gotten my LLC set up and started and applied for my EIN and all that, but I'm waiting on the tax number back from my state. And
okay.
So yeah, I'm kind of started, but not too far.
Starting. Oh, it's exciting.
Definitely.
You're doing the right thing by, learning as much as you can before pulling the trigger. So. Okay, so I'm going to mute everybody out because we get a bit of an echo if we don't. And then at the end, I will unmute everybody. We can have questions and answers. And also feel free to ask questions in the chat. Okay, so I'll tell you a little bit about myself. My name is Tawny Berg. I am a CPA. I work for Huddleston Tax Consulting, and we do mostly small business tax returns and individual tax returns. And I got my Master's of Taxation from Brigham Young University back in 2003. I worked for 2 years at KPMG in Seattle, and I absolutely loved it. People were great. The work was great. But I felt a little bit, I don't know, I didn't feel really satisfied. Saving hundreds of dollars for a big company, they didn't really care. So I ended up finding Huddleston Tax Consulting, and it was a lot more enjoyable being able to work with small businesses and help people save who really, really notice a dollar. So it's been a lot more enriching in my life anyway. And I realize everybody listening has different tax situations. Some of you are just beginning. Some of you are well established. Some people are operating at a loss. Some people are operating with lots of income. Some of you set up, some of you are not set up. So what I did was I picked 7 of the most popular areas where our clients have trouble or issues, have questions, or they just simply aren't providing us with correct information, or they just don't know how to take these deductions. So those are the main things we'll talk about today. And at the end, feel free to send me emails or give me a call. We can talk about your individual situation. And I hope something will be of value to everybody, even though maybe not all of it will apply, but hopefully something will benefit you. All right. So in the United States, there are basically two tax laws. There's one for people who are self-employed, and then there's the other for people who work for somebody else. And people who work for somebody else, basically you get a very limited set of deductions. You get, your itemized deductions and a few credits here and there, and that's basically it. But if you have your business, there's a huge, huge, huge stack of laws and deductions that are available only to you. And trying to figure out exactly what you can deduct, how to deduct it, and the legal way to do it to avoid an audit, it can be totally overwhelming. So we'll talk about some of those things today. And the first thing you need to do when you're considering starting a business is picking the correct entity in your business. So obviously some of your choices are sole proprietorship. This one's really popular because it's simple. However, you have to pay full self-employment taxes of 15% on your profits. And LLC, this can be taxed either as a sole proprietorship or as a partnership, as a corporation. You basically can choose how you're taxed with an LLC. And the basic The basic benefit over an LLC over a sole proprietorship is just a little more liability protection. Partnership, pretty straightforward, one or more owners sharing the profits and losses. C corporation, you pay tax at the corporate level and on the dividends that you receive as an owner. S corporation, you avoid double taxation and save on the self-employment taxes. And I'm not going to go into too much detail about these because John Huddleston will be presenting another webcast on May 12th at 1 p.m. and again at 5:30 p.m. and he will go into really great depth about the pluses and minuses of all these different entities. So if you haven't decided yet how you want to run your business, or if you have questions, maybe you want to make an election. If you are an LLC and you say, well, maybe I should be an S corporation, I've heard good things about that, it might be a good idea to tune into this other webinar, get some more information. And another good thing to do is to meet with an attorney and ask about liability protection, because each entity provides different benefits. The next thing to do is my business really a business or is it a hobby? Now, why do we care? Because if your business is considered to be a hobby versus a business, the IRS will not let you deduct your losses against other income, only if you're considered a real business. And so by default, the IRS likes to see profit in 3 of the last 5 years. Well, we're in a down economy, right? Or maybe you're just getting started and you're worried, what if I don't have profit in 3 of the last 5 years? So this is how you can overcome this. First, you should prepare a business plan with at least 5 to 10 years of estimated, growth, profits. Say, well, I'm not going to be profitable for a while, but I do plan to be profitable. And if I'm not, then these are the steps I'm going to take to fix it. And do you refer to your business as a business, or do you go around telling all your friends that I'm just in this to make money, it's not really serious? Somehow things like that get back to the IRS. Don't say that. Don't ever say that. Always call your business a business. Do you devote regular time to your business? And by regular, I mean, are you devoting some time every single day in the week or most days out of the week, or is it just one day a month, a couple times out of the year? Are you treating it like a real business? Do you conduct your activities in a business-like manner? Do you actually hire people to help you make your business better? Like if things aren't going well, do you hire a consultant to help you? Do you have a good accountant? Something that's really, really important is keeping excellent records. A real business that's operating, say, like a McDonald's, they're checking all the time to see how they're doing. They run reports. They say, we're not making money this hour. We need to make some changes. How often do you do that in your business? Are you even able to? I know a lot of people save up all of their receipts until the last day in the year and add everything up and say, oh my goodness, I lost $1 million. How did that happen? That's not very business-like. That doesn't show the IRS that you're serious. So part of that, obviously, is to record your expenses at or near the time of the event. And one way to do this is to hire a bookkeeper. I know most people who run a business, they say, I'm just not good at bookkeeping. I can't stand it. I hate the administrative part of it. Well, that's great. Just hire somebody to do it. And if you can't, then figure out a system that works for you that you will actually take the time at least once a week to write down your expenses. And one of the best ways to do this is to get Quickbooks or a tax diary or even just a simple spreadsheet. And if you aren't sure how to use Quickbooks, I know a lot of people aren't, we have another webcast coming up on June 2nd at 8 o'clock in the morning and again at 2 o'clock. And it's with Jessica Chisholm, CPA. And she'll go through some of the basics. So if you have some questions, she'll be there to help answer them. And something else that's important is to keep all of your receipts, especially those over $75. We get asked a lot, well, I have my credit card statement. It has everything itemized. Why do I have to keep a receipt? Well, basically just because the IRS says to. It's one of their rules. So keep receipts, hang on to them, make sure you're recording your expenses at least weekly. And that way it won't be a huge burden at the end of the year. And you'll be able to evaluate yourself and say, hey, I'm doing a good job, or oh my goodness, I need to make some changes. Things aren't working. Okay, so on to one of my very favorite deductions, your car. So a lot of our clients sometimes come in and, our new clients say, oh, I didn't know I could deduct business trips. And so what is a business mile? A business mile is, a trip to see clients, to the post office, to the bank, to supply stores, anything that's necessary and ordinary for your business. And there are two different methods you can choose in order to calculate the deduction. The first is the standard mileage method. And this is a flat 50 cents per mile in 2010. And this is what I tell a lot of clients. If you don't want to keep track of your mileage and you just don't want to worry about this deduction at all, you may as well open your wallet, roll down your window, and let $1 fly out every other mile, because that's how much you're losing by not being able to take this deduction. So, as I was saying, the simple method is the standard mileage method. And something that, trips up a lot of people is, well, I have to drive to my office every single day. That counts, right? And unfortunately, it doesn't. Those are commuting miles. So one way to overcome this is to make your home office your principal place of business. And then every business trip you make after that becomes a business mile. And the other expense method that there is the actual expense method. And this one is a lot more cumbersome because you actually have to keep track of your actual expenses. And those include gas, repairs, oil changes, lease payments, loan interest, parking, car washes, tires, licenses, and even depreciation of the car. So it could yield a higher deduction for you, but it's also a lot more work. So it's up to you if it's worth it. And you still actually have to keep track of your business mileage to determine your business percent. So let's say you drove your car 15,000 miles total in the year, and 7,500 of those were business miles, then you get to deduct half of all your actual expenses. And once you start using the actual method, you can't switch back to the standard mileage method. So talk to your accountant and make sure that you're using the correct method. Now, if you're going to deduct your car on your tax return, you have to be able to answer yes to these following questions. Do you have evidence to support the business use? And two, is that evidence written? And I know this is hard for a lot of people because they don't keep track, and at the end of the year they try and just estimate. Well, IRS, if you're audited, they want to see some proof of where you drove and how much your miles were. So the easiest thing to do is just keep a simple little notebook in your car. It doesn't have to be anything fancy. And at least weekly, write down your mileage, just beginning and ending, and say where you went and how many miles it was. Simple as that. And then at the end of the year, you can just add it all up, and it takes a lot of the headache out of it. And a lot of the stress of worrying about if you get audited, you have some proof. You have what they want to see. And a lot of people ask, well, I advertise on my car, I put a decal, does that count? Are all my miles business miles now? And unfortunately, no. You can deduct the cost of the decal as, say, an advertising expense, but your mileage still has to be calculated the same way. Everything isn't instantly everything's not instantly business miles, unfortunately. Okay, so how to deduct your fund. Now, if I were an IRS auditor, there are two areas I would really scrutinize people, and this is one of them, meals and entertainment. A lot of times our clients come in and they have, just thousands and thousands of dollars of meals that they want to deduct. And it sometimes looks a little fishy, especially if they're just a sole proprietor and it just looks to me like they're out just deducting every meal they eat. And so in order for a meal to be deductible, there are some things you need to consider. There's some rules. And one of the first rules is that the meal needs to be a prearranged meeting with an associate. You can't just walk into a diner and talk to the waitress and call it good. You have to actually be meeting with somebody that you intend to do business with, or somebody that you're getting advice from, etc. You have to conduct a legitimate business discussion. And it doesn't have to be long. You don't have to take the entire meal talking about your business, but you do need to talk about some aspect of your business for at least a little while. The surroundings need to be conducive to a business discussion. So for example, if you're in a noisy nightclub and you can't hear each other, that wouldn't make sense that you would go there for a business talk. And you have to be able to answer the following questions about each meal. Who was there? Where did it take place? When did it take place? Why did the meal take place? And this is most important. And how much did it cost? And if you simply just keep your receipt and flip it over and write who was there and what you talked about, just a little brief summary, your bases are covered. And then at the end of the week, if you write them in your little tax diary or put it in your spreadsheet or your QuickBooks, you're totally set. You don't have to worry about anything. All right, the home office deduction. This is probably one of my favorite deductions because it saves people so much money. But it's also a deduction that many, many people are afraid of taking because they've heard that if you take this deduction, your risk of audit goes up. And this is partially true because this is an area, subject to a lot of abuse by people because A, they don't know what they're doing, or B, they simply, take deductions or they don't do it correctly on their tax return. They claim their whole house is their office, or they don't use their office exclusively or regularly. So we'll talk about some of those requirements. So in order to claim a home office deduction, you must meet one of these following requirements. It must be your principal place of business, or basically where you conduct most of your business activities. Like even if you're a doctor and you go to an office to see clients, you're able to use your home office as a place where, say, you do your record keeping, your administrative work, etc. So, or it could be a place where you meet your patients, your clients. If your office is a separate structure, not attached to your home, or just simply where you store inventory for your business. So how do you calculate your deduction? So for example, if your home is 2,000 square feet and your home office is 300 of those square feet, you get a 15% deduction on your mortgage interest, your property taxes, your home insurance, rent, utilities, repairs, home depreciation, pest control, security. And if you actually have clients come to your house, you can deduct your gardening, yard care, anything to keep your house looking pretty or nice for clients coming. Now, you don't need to be afraid of taking this deduction if you're able to show adequate proof that this really was your home office. And a home office must be used exclusively and regularly for your business. Now, exclusively means exclusively, according to the IRS. I've seen a case where the deduction was completely disallowed simply because they had a cot in the office that the mother-in-law slept on, once a year when she came to visit. And the IRS said, well, clearly this is not exclusive use, which is, ridiculous to you and me, but we have to follow their rules. So make sure that your office is exclusively used for your business. And one way to do this is maybe just to get another laptop and just take it out of the office to do, for your kids to play games on or whatever. Just make sure your office is just for your business. And also that it's regularly used in your business. If you just use your office once or twice a year, it doesn't really seem, legitimate that you really need to use this office in your business. Take a yearly picture of your office. Show that it's really there. Show that you have proof. Yes, I had an office. And of course, before you take this picture, if you need to take anything personal out, take it out. Take out the mother-in-law's cot. Keep records of the square footage of your home and the office. And I like this one. Have the visitors sign a logbook. Make sure everybody who comes to visit signs in so that you can prove, yes, I was seeing clients. They came this often. This is what we did. Keep a work activity log for yourself so you can prove that, yes, I used my office regularly. All right, this one is a deduction that I think a lot of people don't know about, and I think it's really, really great. I wish my parents had known about it back when I was younger. But if your child is under 18 and your business is not incorporated, meaning it's not a C corporation or an S corporation, you do not have to pay payroll taxes on wages paid to your children. So basically what that's saying is you can pay your child up to $5,700 a year without paying income taxes or payroll taxes on that money, but it's still a deduction in your business. So your 15-year-old, if they're working for you at home, you can pay them that much money and they can turn around and pay for their own clothes or their own, video games or whatever else they want to buy, and you can deduct it in your business. So if you were an IRS auditor looking at this, you'd say, I have to believe that your child is actually working for you. So how do you get around that? You have to make sure that what they're getting paid to do, or what they're getting paid, is actually reasonable for what they're doing. So a 15-year-old probably won't be able to, take care of your clients or do your duties, but they can pretty reasonably be expected to clean the office or work on your files, help you keep things organized, whatever they're capable of at that age. And keep excellent records, meaning maybe get a time card. Have the child fill out the time card, say what they did, how long they worked. Just make it legitimate. How would you treat a regular employee coming into your house? And in order for the pay to make sense, you know, you wouldn't pay a 15-year-old $30 an hour to sweep the floor. So maybe call like a temp agency and see what they would charge to send an administrative assistant out to your house. And then maybe pay your child $1 less an hour, and that would be pretty conservative. All right, so how do you avoid being audited? There's a few simple things that surprisingly many people don't do that, you know, trigger audits all the time. One thing you can do is e-file your tax return, and this will make sure the IRS actually gets it. Make sure your tax return is neat. This shows attention to detail. You know, if you just scribble some numbers on, obviously it's going to snag somebody's attention because they won't know exactly what numbers you wrote down. And you don't want an IRS auditor to have any reason to look at your tax return. You want it just to slip through. Make sure all your statements and elections are attached. Report all of your income. And the reason I say this is because as business owners, you get Form 1099s from people you do business for. And they give a copy of those as well to the IRS. So the IRS expects you to have a certain amount of income on your tax return. And if you don't have all the 1099s, or if you don't have the same amounts that that your clients turn into the IRS, they're going to have a matching problem, and they'll have to look at your tax return more closely. You don't want them to do that. Break down the income and expenses into smaller categories. And what I mean by that is, you know, say you have $100,000 of income on your tax return, but then you have $70,000 of expenses, and you just lump them all together and say just miscellaneous or supplies. That looks a little bit fishy to the IRS. They're going to say, wait a minute, $70,000 of supplies? What do they mean? So the better thing to do is because you're keeping such good records, you know, you have everything broken down into different categories, like your supplies, your meals, copies, your car expenses. Break them all out, make numbers smaller. It looks a lot better. Now, sign your tax return. That one seems really basic, but a lot of people forget. Use correct Social Security numbers. Again, seems simple, but it triggers a lot of audits. Okay, I'm going to open things up to questions and answers. And I will unmute everybody. And before I do that, though, I would like to tell you I'm going to be sending everybody copies of the PowerPoint presentation. And I'll also be sending out a little tax coupon for you. So make sure you're registered at smallbusinesswebcast.com so I have your email so I can send all this to you. And if you don't feel comfortable asking questions over the chat or over the phone line, go ahead and just send me an email as well. Okay, I think everybody's unmuted if you have questions. It's pretty much impossible to answer, you know, to go through everybody's unique tax situations in just a half an hour. So, so feel free to, sure.
Going back to what you said about the $7,500, the 7,500 miles you have to log per year for the mileage deduction. Is that what you said?
Oh, it was just an example. So if you drove 15,000 total, and you drove 7,500 for your business, then that's half. So half of your actual expenses would be business deductible.
Oh, okay. I thought you were saying there was a minimum amount of miles you had to drive.
No.
Okay.
Nope.
Thank you.
Mm-hmm. Okay, well, I'm going to go ahead and end then, and I'll be sending out an email probably tomorrow morning to everybody with the slides. So make sure you're registered at smallbusinesswebcast.com. And again, there's going to be the Quickbooks presentation and the LLCs and S corporations explained in further detail coming up as well. And we're also getting other people that can do these presentations as well that aren't necessarily just tax related but have other things to do with your business. So keep checking that to see what we have in line. Hope you all have a good evening. Thanks for attending.
Thank you. Thank you.
Thank you.